Well, the S&P is trading at a new record high in the final hour of trading. We've had some positive manufacturing reports out of the US today and speculation that we may see some stimulus out of China and Japan. Now we're joined by Mark Newton. Mark, last month we saw small caps and tech stocks suffer. It's the start of a new month. They've done very well today. Are they due for a rebound?
Yeah, my thinking is as you enter the first quarter, oftentimes you'll see a little bit of mean reversion, and we started to see that just in the last couple of days, where a lot of these, high-flying, go-go momentum stocks that have been hit hard, the Tesla, the Netflix, the Priceline, the Amazon, they've all started to stabilize and rally. I think a lot of people are seeing that these are still legitimate, they're good companies, you can step in and buy dips. You look at the first quarter's worst performing sector, consumer discretionary. Obviously last year's darling up 40%. This year we're down 400 basis points to the S&P the first quarter. So you've seen a little bit of buying dips in that sector over the last couple of days. And my thinking is you can see a bounce in discretionary. And meanwhile, utilities, the best performing, is off today. So you're seeing some of the best performers being sold, some of the worst being bought, which I think makes perfect sense going into a new quarter. People trying to take advantage of those, the mispricings, if you will, just because some dramatically outperform and some underperform.
Okay. Now there's also speculation that we may see more stimulus out of China and Japan. Would that be relevant for US equities? Would it provide a further boost?
Well, I think it's definitely relevant that China does something to help to stabilize growth. That's a big theme that everybody's watching. China's the elephant in the room, and everybody wants to make sure that they don't suffer any type of a hard landing, that they can maintain a decent amount of growth. So that is absolutely important. With regards to the Japanese, I think their inflation targets recently came within a whisper of their own target, and despite the fact that there are numerous different problems in Japan, and Abe used that to sort of pad the, basically toot his own horn and saying, look, my reforms are working, and that caused an immediate move higher in dollar yen, which is worth mentioning because the U.S. stock markets have tracked dollar yen ebb and flow since the beginning of the year. So you saw a big breakout in the JPY, and since the S&P has followed really over the last couple of days, and now we're back at new highs with the S&P. But as you mentioned earlier, the NASDAQ, and there also are still very much laggards, and that's a little bit of a concern yet. We want to see all these indices hitting highs at the same time. Right now, we're certainly not there, but it's a step in the right direction to see, the S&P and the Dow being at least close to new highs.
Okay, thank you, Mark. That was Mark Newton of Grey Wolf Execution, and I'm Jane Searle for The Street.